Hey, welcome to our webinar. Okay, hey everyone, welcome to our Tuesday webinar, Introduction to Trading, right? Okay, for those who are on different platforms, just know that we are streaming on different platforms. We are streaming on Zoom, Facebook, YouTube, Vantage, just few platforms on Vantage. So if you guys have any questions or any comments at any point of time, you can just drop it in the chat box and I will be able to see it from my end, okay? So hey everyone. Hey, oh, sorry. Okay, we'll just let everyone else settle in for a bit before we start. All right, cool. Okay, nice to see you too. Hey. Okay, so disclaimer, you guys already know how this works. Whatever I share in this webinar should not be construed as trading advice. It is purely educational, okay? Just a risk warning that trading FX and CFDs, especially if you are trading on margin, carries significant risk and is not suitable for all investors, okay? So please do not put in life savings into trading. Please diversify. Please do what's right for yourself, okay? Don't go all in, okay? It's a very risky business. Unless you already know what you're doing, then yes, do as you please. But yes, it is my job to remind you guys. Okay, so hey everyone. For those who don't already know us, I mean, I know a lot of you are here on our webinars every week, but for those who are not here in our webinars every week and you don't know who we are, it's mostly for the new peoples, right? My name is Cass. Okay, I am from Evers Fortune Group. We are a Singapore-based fintech company, right? So our team consists of Desmond Leong, our chief trader and CEO. You've got me. I am a prop trader and an investment analyst here at Everest Fortune Group. You've got Melanie, who is an investment analyst, and Joe, who is an investment analyst. So you guys have seen Melanie. You guys probably seen Joanne as well, right? Okay. So my name is Cass. I've been trading for a while now. So I think one of the more notable achievements I have done in trading is passing certain prop trading tests 4 times in a row. Okay, so these prop trading tests require me to do at least 10% a month within that month without getting more than 5% drawdown. Okay, so I've done that 4 months consistently, month after month after month. And today, whatever I'm sharing with you guys is basically how I manage to get profitable in that way and the strategy that I use and was using to be able to achieve such profits. Okay, so a bit about Everest Fortune Group. We are the finalists for Best Forex and Best Equity Research for 2019, 2020, and 2021. Okay, so what we mainly do here is we advise brokerages, banks, and institutions where we think the markets are heading. Okay, we spend a lot of time back testing, and a lot of time is spent into like just testing out strategies and seeing what works and what not. Okay, so if you guys do have any questions throughout the webinar, anything regarding trade, anything about helping you grow your account, do feel free to ask at any point of time. Okay, don't be shy, guys. Like, I know it's streaming on different platforms, and yeah, you don't have to be shy if you're asking questions. Don't worry, nobody can see your questions other than me. Okay, especially for those on Zoom and I think the Vantage's platform. Okay, on top of that, ultimately, I just want you guys to remember that the whole point of these webinars is to get you guys to get better in trading, right? If not, I mean, you wouldn't be joining either if that wasn't the main aim. So these webinars especially brought to you by Vantage in collaboration with Everest Fortune Group to help you guys get better at trading. So we're gonna go through really basic stuff every Tuesday. So every Monday we do kind of like market updates and breaking news and whatnot. And Tuesdays we do topical, right? And Thursdays we do live analysis. So I do see a lot of you on the Thursday sessions trying to look up for some setups and whatnot. But Tuesday sessions are important as well because we will be going through the basics. So today we're going to do introduction to Forex, right? As we go down, we'll be covering even more things such as trading, psychology, risk to reward management. Okay, so there's a lot of things we will be covering along the way on Tuesdays. Okay, this is kind of like a series, it's a boot camp to help you guys be better in trading. So do come back every Tuesday so that we can strengthen and grow as a trader along the way. Okay, so agenda for today is introduction to the world of trading. We're going to look at some trading jargons, filtering through the noise. How much time do you need to trade, and how much time do you need to master trading? So which products should you focus on, and different approaches to trading. Okay, so let's start the webinar proper. If you guys have any questions, do feel free to ask. Okay, hey Phillips, hey, welcome to webinar. Hey Brian, hey John, hey Joash, hey Bob, hey Daxton, Williams. Okay, hey, welcome to webinar. Hey, yes, okay. Actually, I didn't ask you guys in the start of the webinar. I usually ask at the start of the webinar, can everyone hear me loud and clear? Can everyone see my screen and hear me loud and clear? Like, this is the most important thing because I don't want to keep talking and only to find out you guys can't even hear what I'm saying. Okay, everyone is good, right? Like, I'm not just talking to myself, right? Okay, cool. Thank you so much. Okay, so let's start. What is Forex and how does it work? Can you guys let me know in the chat box what you think Forex means? Okay, currency trading. We've got some answers coming in. Currency trading, currency exchange. Yeah, so basically a lot of people think what Forex is just like, it's kind of like a money changer, right? When you go to a money changer, right? For example, when you go to the money changer, you change, I'm in Singapore, so I'm going to use the Singapore dollar as an example. Okay, so let's say you have Singapore dollar, you want to go to Japan for holidays, right? So when you change this dollar, for example, to the Japanese yen, it was, okay, I can't remember offhand what the exact number is, but let's say it's 1 to 2. Okay, so if you change 1 Singapore dollars, you get 2 Japanese yen. Okay, for example. Okay, so you go on your holiday, blah blah blah. It's been a week, maybe a few days, and you come back. Now, the Singapore dollar, 1 Singapore dollar can actually get you 3 Japanese yen in like in comparison to in the beginning where you got it for 2 Japanese yen. So you see how when you went to the holiday, you actually went for a more expensive holiday because your Singapore dollars only get you a lesser amount of Japanese yen compared to if you were to go a week later, a month later, on a later date. Okay, so a bit of Forex is kind of like the exchanges of currency. Like, so you're always comparing one pair to one pair. It's always like the US dollar to the Japanese yen, the Singapore dollars to Japanese yen, the Euro dollars to USD. It can be to multiple, so many different currencies, but it's always two. Okay, so it can even be Japanese yen to the Malaysian ringgit, for example. Although those are exotic pairs, the more common ones are usually the US dollars, the euro, the pound, the Aussie, the Canadian dollars, and the Kiwi dollar, right? Okay. So I would say it is kind of like the same idea, but not exactly as your money changer. Because if the money changer, you have to go straight and you have to like change with fiat, right? You have to have actually physical cash with you. But like when it comes to forex and trading, it's you're basically on a device. You're on your computer, for example, on your phone. You're just trading. You're just trading the differences in those currencies. You're just trying to catch those movements within those currencies. Okay, just very basic stuff, right? Okay, so as I was saying, before your holiday, $1 could have gotten you 100 yen, and now after your holiday, $1 can only get you 110. Now can get you 110 yen. So the US dollars now is worth more than before you went on the holiday. So technically, you went on a more expensive holiday. So my question now is, if before your holiday you went on, I'm just asking to see if you guys are still following. Okay, I'm just gonna be asking questions throughout the webinars. I just want to see if you guys still following me. If you guys are, it's great. Like I want to make sure, again, the point of this webinar is to make sure you guys grow as traders, right? So I will be asking questions throughout the webinars to see if you guys are still following, and if I have to repeat anything, or if you guys have any questions or anything. Okay, so the question now that I want to ask you guys is, if before your holiday you went to Japan for $1, $1 being 100 yen, right? And now you come back with leftover yen, right? For example, now you came back with 500 yen. Okay, so my question is, after your holiday, when the US dollar is now worth 110 yen, did you make money or did you lose money? Can you guys let me know in the chat box so I know if you guys are still following? All right, we've got mixed answers. So some of you are saying you lost money. Some of you are saying you made money. Okay, there can only be one answer here, right? Actually, you did lose money because now the Japanese yen is worth less than when you went on your holiday. So, for example, now you have 500 yen left over that you want to convert back to the US dollar. You actually need more Japanese yen to convert back to the same amount of US dollar you would need before going on your holiday. Okay, so in this case, time actually weakened the Japanese yen, and now your Japanese yen is worth less than what it was before your holiday. Okay, so it's kind of how it works with Forex, right? It's just the strengthening or the weakening of one currency to another. Okay, do you guys have any question thus far? Okay, all right. Oh, Philip is saying 50. May I check what you're referring to, Philip? Okay, hey Brian. Hey, welcome to the webinar. Hey. Okay. Okay, so someone is saying that, let me just check, okay? Let me just give me a sec. Let me log into YouTube as well. So someone is saying they're sending me messages on YouTube, but they don't really see it. Okay, cool. All right. Everyone good for now, right? Everyone can hear me. Everything's good, right? Okay, cool. I'm going to move on. Okay, so let's move on to some of the jargons that we do use in Forex. Okay, so some of the jargons that we do use is, I'm not sure if any of you have heard any of this. Actually, can you guys let me know in the chat box how long you guys have been trading for, or how long you have been in Forex or trading or whatever it is? instrument that you guys have been trading. Can you just let me know in the chat box. If you I'm not answering to, okay, let me just double check, okay guys, because let me just double check. If I'm missing out some of your questions. Okay, hey. Okay, sorry, I was missing out Ravelo's message. Okay, hey Santiago. Hey, sorry. Okay, I guess I have to open multiple chat boxes. Sorry about that. Okay, because I was only seeing messages from Zoom and Facebook, I think, and YouTube is on a different box. So sorry for those on YouTube that I missed out. Okay. Hey Santiago, hey Ravelo. So Ravelo is saying 2 months of live trading, 1.5 years of jumping in and out of the topic of trading. Okay, that's totally fine, Ravelo. I mean, trading is. I don't think it's hard. I don't think it's super difficult, but I must say it is. It requires a lot of consistency and it requires a lot of hard work and just it's just a lot of practice, I would say. So I do understand if you are in and out of it because it does require you to put in a lot of time and effort to go and learn this topic as well. So it's totally fine. The good thing about this webinars that we're having every Tuesdays with Vantage is to teach you guys from the basics to from the very beginning. So if you are in and out, it's totally fine. Okay, we've got Nalumaga. Oh, Marta. We got Marta saying 7 months. We got Philip saying 6 months. Okay. I would say most of you are fairly new, right? Because most of you are less than a year. It looks like now I'm 100% committed. I'm glad to hear that, Ravello. I am glad to hear that because I mean, I don't want to oversell this trading dream. I don't want to make it seem like it's oh, hold on, guys. I didn't even realize that on YouTube the slides are not moving. Was I stuck on introduction to trading slides on YouTube for the longest time? Because on Zoom we have moved on to the jargon slides already. Can the people on YouTube just let me know if you guys were stuck on the same slides? Okay. Just give me like a minute to figure this out. I'll come back to you in a minute. All right. So sorry about that. I'm not sure what's going on. So it's only the people on Zoom who are getting this. For the people on okay, now you see my slides, right? Now you see my slides moving, right? So should we switch to Facebook or Zoom? I mean, we're still in the trial stage, so I think you guys can just continue wherever you are, right? You can continue wherever you are. Okay, for those on Zoom, can you let me know if you can see my slides now? Okay, I guess we'll just have to stick with not going into full screen. So sorry about that, guys. I really did not notice that for the people on YouTube, you guys were stuck on the same screen. Okay, let's continue with the webinar proper. Okay, so let me make this bigger. Okay, so let's talk about some of the jargons here, right? Let's talk about some of the jargons. So we've got pips or coins, right? So different instrument uses different kind of terms, but it doesn't matter. Most importantly, right? Most importantly, you guys just need to remember. Slides are showing now. Okay, great. Cool. You guys need to remember that it's how you yourself calculate. So, I've been trading for years now, right? I've been trading for years. I personally, I know what pips are. I know pipettes. I know how the decimal point works out. But a lot of times I just say, okay, it moved 500 points, it moved 400 points. So whatever it is, you just need to remember these are just terms, okay? More importantly, these are just terms. It's just easier when you're talking to another trader and you can say, oh, okay, it moved 400 points or it moved 400 pips. But personally, when I say pips, I mean points, like when I'm using. So this is not so important. I think this is a bit more important. So long and short, okay? Long and short is a bit more important. So long, because this is important because you want to know when if you were reading news or anything what certain things mean. So long, I'm sure everyone knows, right? If anyone, most of you have been trading for months at least, right? Most of you have been trading for months. So you guys would probably know that long means buying up. That means you think the market is going up, it's going long. Okay, short means you think the market is going down, then it's on a downtrend and it's going down. Okay, so everyone is good with long and short. Okay, we've also got hawkish and dovish. We've got lot sizes, right? We also have major, minor, and exotic pairs. These are just jargons, okay? And we've got Tokyo, London, New York session. Okay, so this is very easy to understand. Lot sizes basically mean how big you are risking per trade. Okay, so a lot size is super important. It's super important. You guys, no matter whatever we learn, you guys more importantly need to understand the lot sizes very well. Okay, because lot sizes is everything to do risk management, and risk management has everything to do with growing your account. Okay, so understand the lot sizes. It's going to be very, very hard for you guys to grow your account. Okay, now we also have major, minor, and exotic pairs. So major pairs are usually the USD pairs. Okay, can be the euro dollar, the pound dollar, the Canadian dollar. It can be Aussie dollar. Okay, sorry, when I mean Aussie dollar, I mean the AUD against the USD. So AUD, USD, USD, CAD, EUR, USD, GBP, USD. Okay, so these are the majors. The minors are mostly things that are not really the US dollar. So it can be things like the AUD, CAD, maybe the NZD, USD, and wait, sorry, AUD, NZD, the EUR, GBP. Okay, so these are some of the minor pairs in Forex. And we've got your exotic pairs, right? We've got your exotic pairs. So when we say hawkish, right? Right? Ravelo. When we say hawkish and dovish, we kind of mean hawkish usually when we think that inflation is increasing, and dovish means that inflation is decreasing or being negative. Okay. So hawks are those individuals who believe that higher interest rate reduces inflation, and doves favor expansionary monetary policy. Okay, don't worry, guys. If you have anything, thanks for asking, Ravelo. Actually, I really appreciate you guys engaging in this webinars because I want to know that you guys are still following me, right? I want to know that you guys are still following in this webinars. Okay, we've got Tokyo, London, and New York session. So for those who don't know what these are, it's just basically the time that the market opens. Okay, so we've got the Tokyo. Tokyo means Tokyo starts at 9:30 a.m. Tokyo time. Okay, the London session, we've got London session, and we've got the New York session as well, which is also 9:30 a.m. New York session. Because why do you have so many sessions in trading? Although Forex is 24 hours, right? Forex is 24 hours. Why do we have different sessions? It's because of the time zone. So just because it's like the New York session, it starts at 9:30 a.m. in New York. It's going to be at night here in Asia. So that's why we have different sessions for different regions. Okay, but that being said, regardless of the session you are in, the market is actually open 24 hours a day, Monday to Friday. Okay. It's also open on the weekdays, but not to retail traders. Okay, the market is also moving. The volume is very little on the weekdays, but not to retail traders. Okay. Okay, so this is what we were talking about in terms of the New York session, right? This is what we were talking about in terms of the New York session. We've got the Sydney session. We're going to count in GMT because it's easier that way, right? So Singapore is GMT plus 8, okay? Singapore GMT plus 8. So we're here, right? The rest of you, I'm not sure where you guys are from. So wherever you guys are all from, you should know your own time zone. So Sydney opens from GMT 1, sorry, 21 to the next day to GMT 6. We've got Tokyo in this session. We've got London in this session. And we've got New York at GMT 13 to 22. Okay, so what it says here, best trading time. Okay, why do people think that the best trading time is here during this 8 hour here? It's because it's when Tokyo session and the London session overlaps. Okay, it's when the Tokyo session and the London session overlap. So therefore, people have this conception that these are the best trading hours. It's the same as um, during the 13 hour, right? The 13 hour to the 17 hour, it's also highlighted here as best trading time. It's because the London and the New York session overlaps. Okay, so the question is, are these really the best trading time? It's actually not the best trading time. Okay, rather it's more of the time with the most volume. Okay, it's the time with the most volume. It's not necessarily the best trading time. It's more of it's the most volume. Okay, because of the overlapping. Again, the market is open 24 hours a day. There's no one telling on, there's no rule, or this, it's not written anywhere that only here during the overlapping of the Tokyo and London session and the overlapping of the London and the New York session is is when you can make profits. That's not true. The market is open 24 hours. You can make it throughout the day. It's just that when you get in during this time and you're trading during this time, chances of it reaching your take profit and your stop loss is much, much higher than during the times that are not highlighted. Okay? Everyone good for now? Do you guys have any questions? If you guys do, you can ask me. If not, I'm going to move on. Okay, so how much time do you need to trade? How much time do you need to trade? Can you guys let me know in the chat box how much time do you think a trader should be spending a day? Okay, thank you, Brian. Thank you, Joseph. Thank you, William. Okay, so um, some of you are saying few hours a day. Some of you are saying most of you are saying few hours a day, actually. Okay, so the correct answer to this is actually it's a different kinds of approach or different kind of trader that you are that determines how many hours you need to trade or spend on the charts and spend on trading. Okay, so I'll give you guys an example. Let's say you are a scalper. Okay, so for those who don't know what scalpers are people who are in and out the markets really quickly. Depends on your level of experience. That's true. That's true. That I wouldn't say that's incorrect. But yeah, it's mostly based on your trading style. So if you are a scalper and you are someone who are in and out very often in the day, it means that you need to spend couple of minutes because you're going down. You can go from couple of minutes to much longer than that. Okay, so it can go couple of minutes to like the end of the day. Okay, why? Because you're just going in and out of the market, right? So if you are a day trader, you're an intraday trader, it also depends on the frequency of your trading. So I personally, I am a day trader, right? I am an intraday trader. I personally aim to take one good trade a day. I mean, if I see two or three, if I so happen to see two or three good trades, then yes, I will take it as well. But on the ultimate, I aim to only take one good trade a day. I try to look for one good trade a day. If I don't find it, it's totally fine as well. But I aim to look for one. If I find my one, then I will just stop for the day. I'm looking for one, I accidentally find two, then yes, I will take two trades. But ultimately, I only aim to take one or more. Okay. So because I am a day trader, usually I only spend like a few hours on the charts. Okay, usually it's 1 or 2 hours. 1 hour just going through a chart, just seeing if I find anything probable, and then I'll do all my analysis and a bit of research. So it's probably 1 or 2 hours to get my trade. Okay, so that is because I'm a day trader and I don't trade very frequently. I trade like maybe I aim to get into one trade a day. Okay, so we've also got swing traders. Swing traders are people who hold their trade for more than 24 hours. Okay, they hold their trade for more than 24 hours. So these are the people who would need to spend maybe days to weeks looking at their trade. Okay, they need to spend days to weeks looking at the trade because their trade can last 2 days or week. 2 weeks. Okay, so they would need to maybe come back once in a while and day on the week to look at their charts again. Okay, we also have the position traders. Okay, these are position traders are people who trade for really, really long term. Okay, so these are people where they would probably look at weeks, months, or years. Okay, so they spend about weeks, months, of year to get into one single trade. Okay, so it depends on your style of trading. You can be a scalper. Sometimes, honestly, sometimes when I'm a bit like I have a bit more time, right? When I have nothing better to do or nothing else to do within the day, I do find time scalping, right? Because scalping requires you to kind of be in front of the computer a bit more than day trading, right? So, but when days that I don't really have that much free time on hand, I just stick with day trading, and that's 1 to 2 hours. So, can you guys let me know in the chat box what kind of traders are you guys? Are you guys day traders, scalpers, swing traders? Do let me know in the chat box. I want to see if you guys are still following. All right, we've got answers coming in already. Okay, so most of you are day traders. That's great. I am a day trader as well, and I do recommend day trading as well. Okay. Okay, so next thing we want to look at fundamental analysis. I tried to day trade, but I end up scalping. That happens to most of us, if I'm being very honest. Again, if I do, your Walter is a swing trader. Okay, we've got we got day traders here, swing traders here. We've got Brian who is day trading, George that's day trading. Okay, so majority of you I think are mostly day traders, right? Okay, swing trader, I think it gives you a bit more free time or more. It's more relaxed. So the longer you hold your trade, I think it's more relaxed. You don't have to keep coming back to your chart so often. Okay, maybe for a swing trader, you come back once a day to maybe look at how your trade is going, right? But for day trading, maybe you come back once in a few hours. So I guess it depends on the lifestyle you live as well. Okay, because I mean, if I have all the time, right? If I don't have to do other things at all in the day, I would really consider scalping because it's like it's fast game. You know, you're in and out very fast within the day, right? But because I think I do have other things to do throughout the day. So I think day trading does complement my lifestyle very well. Okay, so again, it depends on your lifestyle. I think with time and experience, I learned to trust the trade and accept the results rather than grabbing the little profit I see. Okay, that's great, Ravelo. That actually comes with experience. That actually really does come with experience, right? Not doing things unnecessarily in trading is a big part of trading psychology, right? And it does help you be a better trader, right? Even me sometimes, even though I have been profitable for quite a while now, right? Even though actually this month, right? This month is the 14th of June, and I've already done 4%. I'm 4% in profit as of even for me. I myself still find it hard sometimes to follow through with certain things. So I think trading psychology and discipline is super important, right? Okay, so next question is fundamentals or technical analysis, which is better and which would you choose? Can you guys let me know in the chat box if you guys are fundamental traders or technical traders? I want to know you guys a little better. I want to know your profile a little better. Okay, we've got. Okay, you know what? I realize the people on Zoom, when I ask you guys questions, your answers come in way faster than the people on YouTube. So I'm guessing there is a probably like a 5-10 seconds lag, right? It's probably lagging for the people on YouTube. It's totally fine. You guys don't have to. You can just stick on the whatever platform you are comfortable with. I just was just wondering why the answers on YouTube come in a bit later. Okay, so we've got some of you saying you are a technical trader. Actually, majority of you here are saying that you guys are technical traders, technical analysis. You guys look at technical analysis more. So I'm assuming you guys think that technical analysis is better as well, right? Okay, so I'm gonna let you guys know that which you should choose, fundamentals or technical analysis. It's actually there's no better one, right? There's no. But okay, yes, on YouTube I see my comments way later than I sent it. Okay, that means you guys probably hear the question at the same time, but maybe on YouTube the messages just come in a bit later than on Zoom and Facebook, right? Okay, so back to the topic. So fundamentals or technical analysis, I would have both. Both are good. Okay, good. There's no one better than the other. I think the best that you can do in terms of trading is actually combine both together. So, I mean, I personally, right? I only use technical analysis. I use technical analysis for the longest time, And then I realized at one point of time, every time news comes out, you know how employment rate comes out, the employment rate report comes out, the economic data comes out, and whatnot comes out. I realized when I was doing purely technical analysis, every time there's news, my technical analysis is most of the time wrong. Okay, majority of time it's wrong. So I have recently learned to combine both fundamental analysis and technical analysis, and now my analysis and my trades have become even more probable, and even like the chances of it winning has increased. Okay, so there's no one better than the other. I think the best is to combine both fundamentals and technical analysis together. Okay. Okay, so these are the examples of fundamental and technical analysis, right? So fundamentals, you're looking at like the good economy or bad economy. So it goes by country. Let's say Japan is doing good or not good economy. If Japan's doing good or no good, that will affect the Japanese yen. It's the same. If the US economy is not doing good, that will affect the US dollar. So these are all fundamentals. When we talk about technical analysis, we're talking about chart patterns, we're talking about calculations, Fibonacci levels, we're talking about chart patterns and whatnot. So the best is to combine both of it together. Okay, it is best to combine both of it together, right? There's no one better than the other. Okay, so because today we are doing a webinar for Vantage, I hope you guys already know what are the different kinds of products that you can be trading on Vantage. Okay, so the first one, of course, CFDs. Okay, we got commodity CFDs, we got indices, we got shares, and of course, we have Forex CFDs, which is what we specialize in. We do a lot of Forex trading. So for those who are new on Vantage and you don't know what they have, you guys can just head over to their website for more information. Okay. Okay. That is the end of our webinar. Right. We still have a bit of time, so we can head over to our live charts shortly. Or if you guys prefer, can you guys let me know in the chat box if you guys prefer going through some Q&A. Okay, so we can either move on to the live charts or we can move on to Q&A. Okay, actually I'd rather do Q&A because I think a lot of questions you guys will be asking will be very crucial and important to your trading journey. Okay, so it can be like, you don't have to be shy, right? You can just ask me anything and everything to do with trading, and I will try my best to answer you. Okay, it can be anything. It can be what kind of risk should I be taking per trade or whatever. I think this is important. Going to the live charts is more focusing on technical analysis. We have our Thursday sessions for that, right? Thursday sessions is our live chart analysis session. It is strategy clinic, trading strategy clinic, where we go onto the charts, we look for setups, we look for setups using technical analysis, we look at trend, we look at Fibonacci, we look at certain horizontal levels to find our setups. Okay, but today, because I want to strengthen your foundation and basics in trading, you guys can shoot with any questions you like, and I will try my best to answer them. Okay, before that, I just want you guys to know that you can follow us on social media. We have Telegram, we have Vantage MKTS. Okay, so go on Telegram and look for Vantage MKTS, and you guys will be able to find us. We are also on Facebook. For those who are viewing this webinar from Facebook, you are probably already on their Facebook page. Okay, because we've also got Twitter and Instagram and other platforms. Okay, so just search us up, either Vantage Markets or Vantage MKTS. Okay, just look for us and we will be there. Okay, we've got questions coming in already, right? We've got questions coming in already. For those who are here again, the whole aim is to help you guys grow as trader and be better at trading. So do not be shy with the questions. Okay, someone is asking what kind of risk to reward risk should I take per trade? Okay, what kind of risk should I take per trade? Okay, the answer is 1 to 3%. Okay, I personally I do 1% per trade. I never do anything more than 1%. I only do 1% per trade. Okay, and why I do that is because I mean you think about it. If I'm doing 1% trade, I have a $100,000 account, for example. Right, I'm only allowed to lose $1,000 per trade. So I would need to lose 100 trades, right, before I burst my entire account. So I mean, you can say I'm a more conservative trader, right? But I really do emphasize, and the importance to me is actually account preservation. Okay, so why I say 1 to 3%, because I do know people who think that 1% is maybe too conservative. So okay, yes, if it's too conservative, I would say you can go up to 3%. You can do 2%, you can do 3%. Um, Whatever it is, do not go more than 3%. Do not risk more than you should. Okay, do not. I What about 10%? Okay, Brian is asking what about 10%. Okay, Brian, what I can tell you is that you can go 10%, but if you think about it, if you lose 10 trades in a row, you're ultimately losing your entire account. And I know some of you are thinking, oh, to lose 10 trades in a row, you must be a really bad trader, right? You must be a really bad trader, that's why you're losing 10 trades in a row. Okay, let me tell you, it is not impossible to lose 10 trades in a row. I personally, I have done 10% month after month for uh, for quite a while, and I have been profitable also. I have been quite profitable. I personally have lost 10 trades in a row. Okay, so imagine if I was going 10% per trade, I would have lost my entire account already, right? But because my aim was account preservation, me losing 10 trades in a row, I only lost 10%. And when I did my winning trades, because I do 1 to 2 risk to reward, sometimes I do 1 to 3 risk to reward, or sometimes 1 to 5 or even more. Okay, it was very easy for me to win back my account. It was very easy for me to recuperate that 10% loss and eventually become profitable. Okay, so for those when who don't understand what I mean by 1 to 2% or 1 to 3% risk to reward, I ultimately mean that if I have $100,000 account, I'm only risking 1%, right? I'm only allowed to lose $1,000 per trade. Okay, I'm only allowed to lose $1,000 per trade. Okay, but when I win, when I do win, if it's a 1 to 2 kind of trade, that means I win 2%. So I risk $1,000, but when I win $2,000. If it's a 1 to 3 or 1 to 4 or 1 to 5, it is the same. So I'm only risking 1%, which is $1,000. But when I win, I can win 3,000, 4,000, 5,000, 10,000, depending on how I play my trade. If I'm doing the moving of stop loss, I can even scale it to even more profits, right? So that's why I think preserving your account is more important than trying to aim for like crazy wins. You don't need to do 10%. You don't need to risk 10% to grow your account. You can risk a very small amount and still grow your account. Just find better risk to reward trades. Okay. And that will also eventually grow your account. Okay. I hope that answers your question. Okay, we've got another question coming in. What book do you recommend for trading psychology? Okay, guys, there are two books I would want to introduce you guys, which I think changed my trading for the better. Okay, the first book that I've ever read in terms of trading, and which I do ask everyone to read as well, is called Reminiscences of a Stock Operator. Okay, so it's about the life of Jesse Livermore. Okay, so he is at one point considered the best trader of all time, or maybe the best trader of his time or his period. Okay, so in that book, it has a lot of trading psychology, right? And I do recommend new people who have just joined, who's trading for less than a year, or even for those who have been trading for a long time, right, to read this book, because it will help your trading psychology. It will help you see trading from a different point of view. It will help you elevate your trading. You definitely look at risk management different. You look at technical analysis different. You look at a lot of things differently. Okay, so please do read that book. It is really very helpful for people who really wants to take trading to the next level, who wants to make trading their career. I think it is essential. I think it will help you get to the next level faster. Okay, the second book is actually Trading in the Zone. So Trading in the Zone is a trading psychology book, right? It's a very good book on trading psychology. I really recommend it to you guys as well. So why I read trading psychology is because of, I was saying earlier on, even I personally did that 10% loss, which I recuperated in the end, by the way. It took me a very short time to recuperate. I eventually made that 10% back. Okay. I think I was getting a little discouraged, right? But after reading Trading in the Zone, it actually aligns my mindset and my trading psychology back to where I needed to be. And I eventually came up with a plan. I did everything what I'm supposed to do, and I got back to positive in a very short period of time. Right? I think it was more like 2 weeks or something. I can't remember. Okay, so these are the books that you can look at. Okay, what is a good target to have? I have an answer. Okay, you should not have. Thank you, James, for the questions, by the way. Okay, you should not have a target. When you are trading, you should not have a target. Okay, although in the beginning of my webinar, I did say that I aim to do one trade a day, right? It was just more like that was just an aim for me, right? It was an aim for me to take one trade a day, at least one trade a day, if I can see it, if I possibly find it. Okay, but I think these are okay if it motivates you to find the trade or whatever. But you shouldn't have a target like, okay, today I must do 2%. I must be $1,000 in profit. Um, I must take 10 trades. I need to make $1 million by the end of the year. Okay, that is mm, I mean, depending on how you look at the target, it could end up being very unhealthy. Okay, so when I just started trading, I did have this kind of mindset as well. I told myself that, okay, every day I want to make 10%. Right? I know it's ridiculous. It's not really ridiculous if you can do it, right? It's only ridiculous because we don't hear this very often, so it sounds very ridiculous. So I told myself I want to make 10% a day. By the end of the year, I would have made a million already or something like that. I can't remember. So first day I was making 10%. Second day I was making 10%. On the third day, I didn't make 10%, but because my target was to make 10% a month, no matter what, I'm sorry, a day, no matter what, I need to make the 10%. I started taking trades that didn't make sense, right? I was starting to take trades that was not good. Like, I shouldn't have taken any of those trades. And I took them, and instead of making the 10%, I actually ended up um, losing more than I was supposed to. Okay, this was just when I just started trading. Okay, so this is, I hope for those who are new here, who have been trading for less than a year, you didn't have to go through that, because I personally did, and it was not a nice experience. But I am sharing this story so that you guys don't have to relive the experience. You can learn from my mistake instead. Okay. So do not have targets. I would say it's unhealthy. Don't be too attached to the outcome. Whether you win or lose the trade, do not be too attached. Okay. Yes. No worry, James. Thanks for asking. Thanks for joining our webinar. Okay, we've got another questions asking. Okay, I have been losing for a while now. Should I stop trading, or what should I do? I don't know how I can recuperate my losses. Okay, I think it's an important story to share with you guys, because I personally experienced it. Don't worry, I think whatever you guys are going through, especially for the new people here, for the new traders here, whatever you guys have ever experienced in terms of trading, I am 100% sure I myself have experienced it as well. Okay, so I'm not gonna mention your name, but if you are experiencing losses and you are feeling discouraged, I have to tell you, you need to ask yourself, is trading really the career that you want to take? Do you see this as a long-term thing? Okay, because trading is a marathon, right? It is not a sprint. So the problem with my mindset when I started trading is that I thought it was a sprint. I wanted to get rich quick, fast, right? I wanted to get rich quick. I wanted the overnight success, the overnight millions, okay, which you can get with trading technically, right? But it's not as easy as people sell it as, right? So the question is, if you truly do think trading is the answer for you, and which I do think it is. I think trading is amazing. It's an amazing skill to learn. I do think you shouldn't be too discouraged. You should just chill out for now. Just relax. Just chill out. Don't trade anymore. Just calm down first. Just stop. Take a notebook. Write down what you can be doing better. Go and listen to those books. It will help. Realign yourself mentally first. Get your trading psychology in line first. And then from there, you can slowly go into trading again at very small lot sizes, at very reasonable lot sizes, to slowly try to, number one, recuperate your losses, and then eventually be profitable. Okay. Okay, we've got Ravelos saying, I'm still experiencing some losses, but I'm counting it as cost of education. Yes, Ravelo, I think that is a very good way to look at it, right? To see it as education. But I think the cheaper way, the better way to learn is actually to just have a plan. Okay, so honestly, you guys just being on this webinar alone is good enough. I think it is like, you should thank yourself for being here, because you are doing yourself a favor by learning the necessary skills. Okay, so the first thing you want to do is, number one, learn the basics first. Okay, learn the basics. Get your trading psychology right. Get your risk to reward right. Your risk management right. Get your technical analysis and maybe fundamental analysis right. And then from there, you can look forward to being profitable in trading. So the most important thing is that I manage my risk. Yes, please do manage your risk. Please do manage your risk. That is the difference with bursting your account, getting margin call, and not getting margin call. What's the best item to trade? Currency, indices, or metal? Okay, hello. Hey, Walter. Okay, so the best thing to trade, there's no one single best thing to trade. The best thing to trade is actually the thing that the instrument that you have found, you have familiarized yourself, and you have found a strategy to be working well on it. Okay, so the strategy that I use, if you guys tune into our Thursday webinars, you guys know the strategy that I use. Okay, that strategy that I use works very well on Forex pairs. Okay, but I have tried it on stocks, for example. I've tried it on stocks, and honestly, I would say it doesn't work that well on stocks. Okay, because stocks is very fundamentally affected by like the news. Fundamental analysis plays a very big part in like stocks, for example. So the strategy I'm using is very technical analysis, and it works very well for currencies. I find it works very well for currencies. It works very well for gold. Okay, for me, but for index, it didn't work very well. Okay, so there's no one thing that's very good, the best to trade. I would say whatever strategy that you have that fits well and is effective, and that will be the best thing to trade. So for me, it's Forex because of my strategy. If your strategy is combining fundamentals analysis, using a fundamental analysis, I would say go more onto index, because index is very affected by fundamental analysis as well, right? So currencies, yes, it is affected, but technical analysis is very strong on currencies. Okay, so that's all I have for you guys today. Thanks for joining, guys. I will see you guys on Thursday. I'll catch you guys on Thursday. Thanks, Walter. Thanks, Ravelos. Thanks, Brian. Philip. Thanks, Williams. Thanks, Joash. Thanks, John. Thanks, Jessica. Thanks, Rita. Thanks, Mary. Thanks. I will see you guys. For those who are still here, thanks for joining. Please like and share so that we can continue doing these webinars for you guys. It will really help the algorithm a lot. Okay, I will see you guys on Thursday. Bye, guys.